Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Firstly, today's outlook, we're going to start briefly with the Asian markets. There are a lot of interesting things there. We failed, of course, to find a common thread on Wednesday after mixed signals from China's Purchasing Managers Index. As we mentioned, it actually focuses on small to medium-sized enterprises, and it actually fell to 49.2 from 49.4 in April compared with the expectations of 49.3. The Shanghai Composite was just a little bit up 0.1% after hovering around the flat line. The Nikkei 225 index shed about 0.6%, which of course likely weighed by the yen taking a leg higher. The dollar fetched about 110.74 yen, which of course the dollar-yen currency pair recovered from the lows around 110.42 earlier in the session, but still down from the levels of 111 set on Tuesday. European stocks opened lower on Wednesday as investors digested China's latest Purchasing Managers Index readings. And of course, we're looking at just about 0.3% down of the European Stock 600 index. The dollar sat just below the 2-month high against a basket of major currencies on Wednesday after, of course, we saw a mixed bag of US economic data, slightly just a bit tempered on the expectations of a near-term Federal Reserve rate hike. The euro eased about 0.1% to 1.1119, staying above the Monday's 2.5-month low of 1.1097. The data released on Tuesday showed that US consumer spending recorded its biggest increase in more than 6 years in April, but of course the consumer confidence slightly dipped and the survey of business activity in US Midwest also underwhelmed. The British pound, however, remained vulnerable, having suffered its biggest fall in more than 2 months. The previous 2 days, as to opinion polls showing a shift among British voters towards leaving the European Union. The pound was steady at this moment at 1.4483, having fallen about 1.1% on Tuesday. Gold in the commodity sector, however, is steady on Wednesday after closing higher on the first time in the last 10 sessions on the previous day, supported by an easing dollar and weaker Asian stocks. The safe haven asset has gained about 15% so far this year, but has been under pressure since the release of the minutes of the US Federal Reserve's April meeting, which of course boosted expectations of the imminent rate hike. Gold was little changed this morning at $12.15 an ounce, up about 0.8% on Tuesday in its biggest one-day gain since May 13. Oil prices, however, fall sharply early on Wednesday as, of course, production from the major Middle East exporters was expected to remain high or even increase, just as concerns over the state of China's economic weight on its fuel demand and the outlook of the economy. US West Texas Intermediate crude futures were down about 23 cents or about 0.47% at 48.87 a barrel. In the calendar, of course, we're looking at the major important news for today. The Institute of Supply Management will release the business sentiment regarding the future of the inflation and, of course, the most important manufacturing purchasing managers index. This is all due later in the day. That's all of the important news for today. Thank you for watching. I'll see you next time. Bye-bye.